This is Heiken Ashi. Heiken Ashi is a visual representation of the chart, which clearly shows trends and reversals, but more importantly, it is a highly effective technique that is easy to implement and use to make large amounts of profits from the market. Some people think it's an indicator, but the Heiken Ashi is actually not an indicator. It is more like the traditional candlestick price chart, used to understand the movement of price in the market. But this type of candlestick charts is unique. It helps to smoothen price movements and filter out the market noises on the chart. In this video, I will be revealing the best strategy that you can use with the Heiken Ashi price chart to begin to make a lot of profits from the market. These strategies are very simple, but very effective in the market. But before we get to all of that, do well to like this video to help other traders find it, and also become profitable, and subscribe to our channel if you are new here. So my tribe soldiers, let's get down into this business. So first of all, I will simplify this for the sake of the beginners who are still new to this price chart. The Heiken Ashi candles does not show the real price, like you can see in this example. Here I am using the Heiken Ashi candle, and it displayed a wide green candle. But if you look at the normal candlestick, it displays a small candle, because it does not show the real chart, but instead a smoothened version of the candlesticks. Sometimes when trading, finding a trend is not as simple as you think. Market trend does not normally look like this, where the candles are all the same color. Most trends will actually look like this. Well, if you look at it for a second, it may look very easy, but if you are trading in real time, you'll discover that these different colored candles become tools of distraction and confusion. So instead of looking at these normal candles that might display false signals, when using the Heiken Ashi, you would instead see all the candles moving in the same color, making it easier to identify the trend in real time. This is exactly what the Heiken Ashi is used for. It helps to eliminate noises and show a more clearer view of the market's direction. So here is a quick way on how to identify the current trend using the Heiken Ashi chart. You can identify a strong bullish trend if the candles are colored green and has a large body with no lower wicks, and you can identify a strong bearish trend if the candles are colored red and has a large body with no upper wicks. That's for the trending part, but we all know that a trend will not last forever. As time goes on, it will start to weaken and reverse, and luckily, the Heiken Ashi is also designed to detect price reversals. So in a Heiken Ashi chart, you will also encounter doji candles like this. A doji Heiken Ashi candle forms when a candle has a very small body and two visible wicks, that is, an upper wick and a lower wick. We use this doji Heiken Ashi candle to find reversals on the chart. Now, here is how you find reversals using the doji candle on the Heiken Ashi chart. The first step is to find an existing trend, and the next step is to find a doji candle within that trend. The doji can be in any color, as long as it's a doji. The next step is to wait for two huge candles that is in the opposite color of the trend to appear. Like in this example on the chart, we have an existing uptrend, and a doji candle appeared. So, what we want to do next is to wait for a candle with the opposite color of the trend, in this case, a red candle, to appear two times, and both of the candles must have only one wick. Now, this will be our entry signal to signal us to take a sell position. Now, let's look at another example. So here you can see that the price is on a clear downtrend, and the doji candle appears, and next, two huge candles with one wick each forms, which is in the opposite color of the trend. In this case, green candles. So this will be our entry signal to take a buy position. You can place your stop loss below the doji candle, and your take profit target at least 2 times the size of your stop loss. And as you can see here, the take profit target was hitted successfully. That is how you use the Heiken Ashi candles to detect reversals and trade them. The next strategy that I like to use when trading the Heiken Ashi is by combining it with the stochastic indicator some of you are already familiar with this indicator, as I have taught about the full strategy in one of my previous videos, but for the complete beginner, here is a quick one. The stochastic is an indicator that helps us to detect the possible highs and lows of prices on the chart, where a reversal or trend continuation is likely to happen, using overbought and oversold zones. So if the lines crosses below the lower bands, it means that the market is oversold and more likely to reverse upwards. And if the stochastic line crosses above the upper bands, it means that the market is considered overbought and is more likely to reverse downwards. But when trading the stochastics indicator, you cannot take positions solely based on if the price is overbought or oversold alone, because using the strategy this way can lead to many false signals. Like in this example, if you follow every signal that the stochastics display, you will face unnecessary losses. So instead, we need to get a second confirmation from the Heiken Ashi to further confirm our analysis. So here's how you trade the Heiken Ashi in line with the stochastics indicator. But before we get to that, let me quickly introduce you to our Telegram community. So some of you might be wondering if we only come to YouTube to teach you all about the best trading strategies that works in the market. But the truth is that I also use many of these strategies on a day-to-day basis, and you are going to see all my trading results on our Telegram channel. You will see exactly when I took the trade till the time it hits the take profit target. To also join my mentorship program and become my student, you can be able to send me a direct message there, and I will reply you in minutes. You will also know how to get access to my premium group, where I share all the trading signals that I personally trade. Now, let's get back to our strategy. So you want to find overbought and oversold points where the Heiken Ashi has not yet displayed a strong momentum. Let me give you an example. So here, you can see that the stochastics went to oversold levels, but the price has already dropped significantly. So we do not want these types of entries, because the price has already established a strong downwards momentum. Instead, we want something like this, where the stochastics went to oversold levels, but the price has not yet established a strong downwards movement. Therefore, it is more likely to reverse to the upside. So now, let's look at another example. So here we can see that the stochastics went from overbought to oversold levels, but in the process the price has not yet moved significantly downwards, meaning that there is a weak volume to the downside. So this is also a good opportunity to take a buy position. But before you take the trade, always make sure that you see at least one huge bullish candle with no wicks at the bottom in order to further confirm the trade. And when that happens, you can place your stop loss below the last low and your take profit target at the next high, or at least 2 times the size of your stop loss. And as you can see, the take profit target was hit successfully. So now, let's take a look at another example. So here you can see that the stochastic indicator is at the oversold levels, and yet the price has not yet established a strong downwards momentum. So the volume to the downside is very little. Therefore, this will be a great buying opportunity, and so we wait for a bullish Heiken Ashi candle to appear for a more confirmation, and from there, we take the trade, placing our stop loss below the last low and our take profit target at the next high, or 2 times your stop loss. And as you can see here, this trade ended up as a profitable trade. Now, the Heiken Ashi price chart can be so simple, but very effective when you use these strategies on it. In fact, some traders use it as their only trading strategy, and they make huge sums of profits with it daily from the market, using only the Heiken Ashi. All the Heiken Ashi trading strategies that I explained in this video works on all time frames, though you can trade them on different time frames depending on the type of trader that you are. If you are a swing trader, you should focus on the daily or 4-hour time frame. If you are a day trader, focus on the 1 hour or the 15 minutes time frame. And if you are a scalper, you should stick to the 5 minutes or the 1 minute time frame. All traders should focus on their own special time frame. Now, in this video I taught on Heiken Ashi strategy, In the next one, that will appear right now, I taught on how to make your first $100,000 using a very simple strategy. This video will open your eyes to a lot of things that you never thought were possible. We are the Trading Tribe, and it's a wrap for this video. See you in the next one.